uh, you need to hear, right? The goal of this academy is to train you guys, right? Although you might not, some of you might not be in the paid community, but we'll still owe you the responsibility of giving you guys a light, right? That's the goal of the Electronics Academy. You will never hear you never hear anything like subscribe for signals, come and pay for our signals, come let us manage accounts for you. All those things you will never hear from us. Our goal and our only goal is to train you to be a profitable trader by yourself, right? Not that your mentor will come and be calling trades for you or any of that. Like for those of you that are in the Trade Academy, you know me already. That I wouldn't say buy and say I don't do any of that. Right? The goal is to make you consistently profitable. And by God's grace, that technique has been working. It may not be suitable for so many kinds of traders, especially the ones that want to be spoon fed. Right? It won't be suitable for them. But the guys that really want to be serious, it's better for them. Because I think today we had our first female trader to pass an MFF challenge. One of my oldest students, a female. That actually it's actually something noteworthy, right? So I've always wondered why it seems as though it's only guys who hear from the trading industry. And today we have proven that even female traders can do well in their trading. Because passing an MFF challenge is not luck. You're passing those two cases within the time period. It's not luck at all, right? So I'm really grateful for that. We have seen countless results, and it's mind blowing. It simply means that the system works, right? Although it's not the same for everyone, but I can beat my chest and say that the people that actually decide to learn the skill, they are actually learning it. But the ones that are strong and the ones that are always focusing on several things at once, they want to learn here, and they want to take responsibility for themselves, right? So we just try as much as possible to teach you how to trade on your own. No signals, no buy and sell here, put your stop loss there. No, we have any of that for you, right? So you do it on your own. Teach you to take responsibility for yourself, and that way you see results, right? So let's start with the tape reading, right? Tape reading. Tape reading. What is tape reading? Tape reading is actually known as back testing. Right? How else figure what? So tape reading is a trade I called on EU and G. That was yesterday. Amazing trade. So I think with the reading on EU and GU, the trade I call and using it as a case study, right? Tape reading simply means going through past data, right, and spotting out what actually happened. That's what tape reading means. For some people that don't know it, it's like when you're reading a tape or a book, right? So tape reading is simply when you back test, and it's not just using the replay button and all of that. In tape reading, you actually pay attention to your strategy with relationship to the details you're observing in the market. For instance, if you use a certain kind of trading style, when you're tape reading, you're looking at every possible setup that formed according to your strategy, right, or your trading plan. And in my opinion, I feel that tape reading is one of the things that has made a lot of traders very successful. And it really bothers me to know that to find out that so many traders avoid doing this stuff I'm talking about. So I'll be highlighting the trade I'm talking about so you guys can see in case you are not around. Let me just forward it to the group again so you guys can see what's the tape reading. Right, so that's the chart now. Forward it to the group so you will see it now. So these two charts, what's the tape reading? EU shorts and the GBP GBUSD shorts. Yeah, two of them. So tape reading, two of them, and that is it. So tape reading simply means going to your charts and looking out for the details, right? So tape reading is simply back testing, right? It's just simply back testing. But some people don't know. Some people are always asking questions. How do I back test? How do I know what to back test? Right? So I'll just kind of use this to explain everything, right? So tape reading, so you. So tape reading simply means going through past data to identify setups and how you would have maximized the opportunities presented. So just simply going to chat, it's just like reading a book, right? For example, if you're preparing for an exam, so usually yes, it's like study this past question, right? All right, study this. For those of you that actually went to school, right? I'm sure that many of us actually went to school, even if you didn't go to the tertiary institution, at least you went to the primary and secondary, right? So it's simply going through past data to identify setups and how you have minimized the opportunity presented, right? That is what simply tape reading is. You go into the charts, maybe as this week has come to a close, right? You simply go through all the whole charts for the different days and look out for all the possible setups and how you would have maximized it, right? What this does for you is that it builds a kind of confidence in you, right? That's why sometimes some people are always scared when they see some kind of trades I take. Like you see me do 1 minute and going with heavy lot sizes. That is because I tape read a lot. So I've already seen those things pan out sometime in the past. So with what I have seen, I have the confidence to go with those full margins. And you see me going with crazy lot sizes on a 1 minute trade I did, or sometimes on the 2 minutes. It's just a result of tape reading. I've been able to go through the past data and been able to extract certain characteristics that the market presents and how to maximize it. That's the basic what you do tape read. What tape reading does for you is that it puts you ahead of everyone else. When you are used to tape reading, you are going to by far and large be ahead of so many traders because you're going to number one build the consciousness of those things. For instance, now, there are certain trades I can take that some people cannot take because they don't know that thing is actually an opportunity. Like I think GU sells yesterday. I think I was the only one that caused the sell. Most people caused on E, but I caused the sell on GU because the setup that appeared on GU was kind of complex. And due to the fact that I have actually gone through all those things, I know how to maximize even the opportunities that might not look clear to you, but to me, it's clear, right? So I'll be talking about that in a short while, right? So tape reading is simply going through the past data to identify setups and how you would have maximized opportunities. The goal of tape reading is not to be right or wrong. It's just to study the chart. The way you study your books, for the exams and blah blah blah. You want to study your charts to actually be able to point out certain price movements, right, or characteristics because the algorithm doesn't really change, right? What the market does today, to likely do it tomorrow and likely next week, next month, continuously, right? I'm looking for something. Just give me a moment. I'm looking for something. All right, okay. I've seen it. So now let's start with EU. So I want to tape read the EU trade, right? The EU trade and how would have actually maximized it, right? Right. So I think I should use my complex mode. Let us start with this. So now I think this was the trade idea on EU, right? Look at the chart very carefully. I think this was on Thursday, right? This was Thursday, right? So this was where I was looking at for itself. And of course, you can see the screenshot in the comment section, right? So it's not something I went to go and frame up, right? The screenshot is there. You can see a timestamp there. It was like 2:18 p.m. Nigerian time and all of that. So you can see everything was posted before it played out. So it's not like I'm just cherry picking a trade idea to explain to you guys to maybe give you guys the idea that I know what I'm doing, right? So the screenshot is there to prove that the trade was actually called out before it actually happened. The screenshot actually to prove that. And so this was actually the EU trade. And so now, why did I call out this trade? Number one, I don't need to go to the daily charts. Just look at what you can see. What can you see? The market has been trending downwards for like since the start of this is 16th of February. The market has been doing was sloping downwards, right? You can see the market has been sloping. You can see the market has been sloping downwards, right? So it doesn't mean the prophets will tell us that the market is bearish, right? So from the higher time frame, we are bearish on the on cable. Was it cable or fiber? I forgot something it is. We're bearish on EU, right? So now we spotted something now. So look, comparing this with the DXY, let's compare. So you always have to look at the DXY. Let's compare with the dollar index. All right. So comparing this with the DXY. So let's also compare this with the DXY, right? We're going to really go deep tonight. So comparing this to the DXY, sorry, let me put it on the line chart. Sorry, candles. Nice. Let's go. So now the E is the one above, while DXY is the one below. So comparing these two guys together, you can see that they were actually giving what? A kind of opposite structure. You know that when DXY is bullish, the EU, any pairs against the dollar, against the dollar is going to be bearish, right? It's just like a tug of war, like I always say to the paid students. It's like a tug of war, right? You have a rope in between, right? We have EU to the left. We have Euro, we have Euro to the left, right? And then we have USD to the right, right? So we have USD at the right hand corner. This is what EU means. So it's a tug of war. We have EU, the Euro at the left, and the USD at the right, right? So when the USD is gaining strength, it's bullish. So what will happen is that USD is going to do what? Pull Euro down, right? But if the Euro is stronger than the USD, it's going to do what? Push the USD, sorry, up. So that's what it simply means. So they're actually standing at different pains, right? So you can assume that Euro is downwards and the USD is upwards. This is what E stands for. So USD is upwards and the Euro is downwards, right? So if they're dragging this rope now, if USD is starting to gain strength, it's going to do what? Sorry, so I think it should be the other way around. The Euro is this way, sorry, this way. Sorry. So if the USD is starting to gain strength, what happens is it's going to do what? Start pulling what? USD downwards. That's when you start seeing EU doing what? Selling. So whenever the USD is gaining strength, the euro dollar does what? EU start doing what? Coming down the hill, right? But when when the euro is getting strength or the USD is not getting weak, what happens is that euro starts pulling USD what? Upwards. So it's a tug of war on a slopy land. That's what EU stands for. It's a tug of war on a slopy land. That's what currency pair stands for. So you have the US to the left side, to the higher part of the hill, and then you have the US to the lower parts of the hill. So now we saw that from the fundamentals. No, I won't talk much about this because it's actually for paid students now. So for the fundamental aspects, we have had a lot of bullish news. I've taught them how to read news, like the paid students don't have to read news. And so what I'm discussing here. So for the fundamental aspects, for the paid group, I talk about it. So I talk about it on Sunday also. I talk about this in the paid group. I talk about this already. That USD was really gaining strength based on fundamentals and also from technical, but I was more focused on the fundamentals because fundamentals tend to control the markets from the DXY standpoint, right? So we saw that DXY was getting a lot of strength from the fundamental standpoint and then with the chart. So we saw that as USD was gaining strength, it was pulling what? Euro down, and we have been bearish because of what? The fundamentals, right? They're coming for that monthly imbalance on the euro dollar, and that's why this guy has been super bearish. Now, comparing these two charts, what do we have here? We have the market was going. So, at this particular point, this kind of market line, what can you see? You can see that, obviously, you can see that this guy was what? Heavily was bullish. So, if you draw this in time, I don't think it really came into that. Yeah, it came. So you can see that there is actually what a kind of alignment between the EU and the US dollar index. Dollar index is giving us a bullish setup, while what EU is giving us a bearish setup. This is kind of telltale sign that price will likely do what? Go bullish, because you can say the structure of what the dollar index what? You can see higher high, higher low, and then we have what? This higher high. And so price was coming to that point of interest, right? So we have that price is aligning with what the dollar index from what the comparative what analysis. And in the paid group, I talk about comparative analysis in details, the strong correlating, weak ones, blah blah blah. They're already the page group in our resources group, right? So for those of you who have not watched the video and you're in the paid mentorship group, do have to go through the video I talked about correlation analysis is there. So I won't be going deep into that because it will take my time, right? So based on comparative analysis, which have been discussed in the paid group, we have that. And I look at EU closely. So we have that. We have number one, the high time frame was what? How the high time frame was what? This is how you take reach. You look at everything, every case scenario. So you have what? The high time frame was what? In sync. So we had was the high time was in sync for sales, right? Right. So that the high time in sync for the BS. Right. We had was the DXY in sync. Right. You had the DXY correlation in sync for what? BS. Right. And now another thing also, look at, let's compare these two with the cable. Yeah. So new price scale. Look at something now. I want to just show you guys something. This is how you actually make your trading very high probability. So the cable, I think cable is GEO. I'm not really sure if it's cable or fiber here. It confuses me. Sometimes I feel confused. Yeah. So let's go here. Candles. So now look at can you see, normally the EU and the GU move usually in the same direction. It's a very rare cases that you see GU and EU going different directions. That is mostly when there's a fundamental event. That is mostly when you see EU, GU going in different direction. But usually they move in tandem, right? So you have what do you have here? The same thing. So you have what a cell setup, right? Forming right about the same time that EU was doing what giving its. Can you see how it was aligning? Can you see setup here? Aligning. So the cell was correlating with both DXY, G that moves in sync with E was also doing the same thing, right? So we had correlation analysis from different charts. We thought that this market was likely to sell. So G was in sync with that as well, but we don't really consider G, right? The most important thing is the high time frame and the DXY correlation. Now, what do we have here? We have sorry if you may not really get this, but I'll just kind of talk about it because you may not really get this if you're not in the pay community. So now watch this. We have where is the midnight open for Thursday? Where was it? Okay. Thursday midnight open was here. Right. So price, first of all, it ran above, giving us what the power of 3, right? We had that accumulation of longs manipulated above Asian highs. So we had our Asian highs there. I kind of use an indicator to note Asian highs, the Asian range. So we had a price kind of come to the midpoint of this, but didn't really pan out as we anticipated. So we had a price open at midnight here. This is Asian session. What have I done? What have I done? I'm coming. Let me say something. But I'm going to remove it. It's not easy. I'm looking for Asian range 7 o'clock to 12. Asian session. Okay. All right. I've seen it. So it does show me the range, right? I've seen it. So we had Asian high resting at this point here. So we had an Asian high resting here, and what's relatively quite high, right? So we had the midnight candle open, right? Price run above the midnight, run above these Asian highs, giving us what the distribution, right? Then after distribution was formed, what do we have? We have price giving us what? An imbalance, right? That an imbalance inside this spot, like in between here, you have that of tiny imbalance resting there, and blah blah blah. So you had structural reasons to go short on this market, right? So I posted this when I saw it, I was like, okay, price might likely do what to rally here. And then not only that, we had London lows resting here. So we had London lows resting here because London lows formed before 8 o'clock. So this was 6 o'clock New York time. So it was a London low. So I had London low resting here. To me, I see London lows as liquidity during the New York session. So I had London lows resting here, and the price coming to our point of interest, right? So price came to our point of interest, and then we had a sell confirmation, right? So let's go through the confirmation, which is just normal breakout structure, right? So on the 5 minutes time frame, what do we have? So we have price came to our POI on our 30 minutes POI. So we came to the 5 minutes, right? So what do we have here? The price hits our point of interest. What do we have here? We had was a breakout structure. So we had markets making the highs and lows. We had highs, low, high, low, high, low, and then a displacement breakout structure. So we had that breakout structure as was the point of interest, right? And not only that, we had was a fair value gap resting. So we had this fair value gap resting at this point, right? So we had a fair value gap resting here, right? Giving us was a sign market would likely was go lower. And after the fair value gap was filled, what did the market do? Market came and closed below this previous low. So there was a double break. So I had a double MB here. So we had a double MB. Markets were coming to give with that double MB. Right. So after double MB was formed, we had was a double sign for itself. Now, one thing that actually caught my interest on this was that we had a divergence, right? So if you don't really get it, then because I've talked about it in the page mentorship group, I talked about all these things. So if you don't really get it, I'm sorry. So now we had a divergence on GU, right? So I'm going to show you quickly that. So if you come to the British pounds against the United States dollars, so new pain. So look at the same chart. I want to look at GU on a new pain, right? So I'm going to show you guys the divergence there. That was what strengthened my conviction that market was going to do was going to do short. So we had candles. Now what do we have here? Now notice something. That at this particular spot, notice something here. That at this particular area, what do we have here? Vertical line. Notice something. At this area, what can you see? On GU made what? A high, right? So GU made a high. But what happened on EU? EU did not make a high. So you just take it here. So in this spot here, GU made a high, but EU did not make a high. So this was actually what we call a divergence. Whenever you spot a divergence, it means that smart money is doing what? It's selling the weaker pair. So on this particular chart, EU was the weaker pair because EU could not make what? A new high. So EU was weaker than GU. So EU was more probable to sell. So I saw this, I was like, man, he's going to drop. I saw this divergence. So it was a more compromise on this trade. So we had a divergence confirmation here. GU making a high and EU not making a high. That was actually a divergence, right? So that was actually another reason you would have likely taken this sell, right? I know something. Right? Note something. Note that so note that when all of this has happened, when I saw this, I was like, EU. I said one of my paid students was like he's scared of this EU trade. I was like, hold it, right? It's going to really dump. But I saw that divergence, and then using the rule of advanced market structure, right? For those in the paid group, you understand this too. That when it comes to advanced market structure, price should not violate an intermediary high. So we had an intermediary high here. Intermediary high is the high that fills an imbalance, right? So we had an ITH there. So we had an intermediary high here at this point here, right? We had this short-term high. So this is a paid group, you know what I'm talking about, right? So we had a short-term high here, and that was an intermediary high. So this intermediary high was filled the imbalance and then dropped lower. So using the law of advanced market structure, price should not go above the intermediary high. So you have simply shorted the year and put your stop above what? The intermediary high. So that would have been a beautiful entry here. So judging by this, I would have said if you maybe took yourself at maybe this imbalance, maybe put your stop above that high, right? Maybe above this overall high here. You have made an amazing one. Using the target the London low, you made an amazing one to 2.19. But if you play the intermediary high, the entry would have been somewhere around, the stop would have been somewhere around there, right? Using the intermediary high, price should not go above an intermediary high if you want to be bearish. So if you use the intermediary high, you have made your amazing one to 3.27. So that was what G gave. So we're reading this You see how we are doing analysis from the higher time frame down to the lower time frame, right? I know that some things I have said must have blown over some of your heads because you're not used to that. That's why um, sometimes um, um, attending just one boot camp is not enough, right? Because they're not going to be able to cover everything. There are many things I've talked about in the paid group, right? Step by step, different classes. And it's not something I can really be talking about all of them in one class. That's why sometimes it's just good to just find an academy and join, and then you can learn properly, right? Without rush. So now we had that intermediary high for me, price broke lower, and then we had the short opportunity and then went lower, right? Now that was the short on EU. Now let's head over to the British pounds against the United States dollar. So the same thing similar happened on GEO, right? We are tape reading now. We are tape reading. Also on the what time frame was that? Let me check time frame again. Was it 30 minutes? What time frame was G? G was on 30 minutes too. So 30 minutes as well. So that was on Thursday. I think it's Thursday. Thursday. Where are you? This Friday. This last week, oh Jesus. How did I reach last week? So you can see the same thing because that G has been bearish, right? I kind of gave the reason why it should be bearish. Just go to the daily time frame, let me just recap it. So I really marked this out long ago. I marked this when price was even coming there. So you can check the group. I say I marked this chart. I posted it before this happened. You can see how we call out trades before anything actually happens. So I call out this trade before. When I marked this out, price was not even close to that point. Price was, I think, somewhere around. I think, if I remember correctly, price was somewhere around. It was looking like this, something like this. Yeah, I remember. All these things are not printed yet. When I call this right there, so because we're not doing guessworks. So I said I called this out before any of this panel, and price came and is doing what I said it will do. Right. So from the daily time frame, I'm bearish on GU. So let's go straight to the 30 minutes time frame. All right. I'm teaching you guys how to take bridge. Right. For me, I feel like this is what really makes the difference between the traders that are struggling and the traders that are actually making progress. I feel that one of the major difference is tape reading, going through charts and studying what the market did. That's what I feel, my opinion. So it was actually on Thursday we had it. So this was it. So we had that same sell setup. All right, we had this. All right, let us use the same thing we talked about. We had what the midnight candle open where was the candle? It was on 7 o'clock. Right, they opened the year. Right, and price was run above was Asian high, broke the downside. So we had London lows waiting to be captured right about. So that London low resting there. London low is a low that falls before 8 o'clock New York time. So we had this low formed by 4 o'clock, which is not up to 8. That's actually a London low. So if I'm bearish, I usually target London lows for my take profits. But while if I'm bullish, I target London highs. But if I'm in the London session, I target Asian highs or Asian lows. That's how it's basically true. I target the lows or highs of the previous session if I want to really continue the trend of the markets. That's how I basically trade. So you usually see me setting like Asian highs, blah, 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 blah. That is basically what I'm doing. So I saw this price came here, gave all the set up, and this. So now, initially, I actually took a first loss on this trade because of this spike up. Because market actually started selling here. But then this spike up actually took me out the first time, right? But I actually entered again and made what I lost. I still made some profits back. That is why it's good to use good risk reward systems, right? That's why it's good to use. That's why sometimes one of my trades is canceling about 3 losses, or even sometimes 4 losses. One that is canceling everything. That's why I don't know. Sometimes even if I'm in product, I don't really care because I know if I just win 1, 2 trades, I'm back up. That's high. I like to trade in a way that I risk less and make more. So it kind of keeps me comfortable. It really helps me to feel comfortable losing trades because number one, losses are inevitable, and number two, I can actually recover them. So let us take trade. So I think on this particular trade, I actually took a loss on this trade. I took a loss here. So when the market was doing this, I actually where was it? Right. So we had news spike in the market up here. So inside here, I had a 1 minute. No, okay. Inside this spike here, There's no imbalance here. What? This is crazy. For real. On my own channel, there was an imbalance here, like in between these two candles. There was an imbalance inside there. This is crazy. So I think on this, I was looking at this as was a liquidity sweep, right? A liquidity sweep, and then a break of structure. So I started played 1 minute entry. I don't know how I did this, but I can't go to 1 minute because 1 minute will actually make me start going too far back, right? So I actually got a 1 minute entry after this break. So I got an entry here. I held price. Price came to 1 is to almost 1 is to 2. My target was this low. Price came very close to hitting my my take profit, which was at London low. But you can see price came and it was played around and then it took me out. When market gave this spike, it took me out. This weekend spike here, so it took me out because I actually got my first sell inside there with this move down. I was hoping the market would eventually come to this low, but you can see there was actually a smart money interference. If you compare this with what I compared earlier, which is the euro dollar, there was no spike up on the euro dollar, but GU decided to manipulate price, and then we had this high fall. But the EU there was no high, so I was like, okay, divergence. So I actually took a loss on by this spike up. Then I actually caught my entry inside this spike up. So the price took out this this high. I knew the market was still bearish, and we are still inside my bearish PY. So I simply went to the 1 minute time frame. So I think I went to the 1 minute. I hope it's not too far to get to. Let me go to the 1 minute. So actually on the 1 minute I caught this on 1 minute. Actually caught it on 1 minute. Right. That's why you must always be confident with your trading. Losing one trade does not mean that you're going to lose the next, right? You must learn how to be actually trusting of your strategy. You have to learn to trust your strategy. Not because you lose one, you begin to fidget, right? Well, I know that some people will not take another one, but not me. I took another one. I actually made a good win from it. Although I didn't hold it completely, but I took a good win on it. So when price, okay, I can see my entry now. So this was actually my first entry. You can see that there was actually an imbalance on the 1 minute time frame. You can see there was an imbalance here. So I actually played this imbalance here, and price sold a bit, and then took me out. So we had this high liquidation break of structure here. We had that US here. We had a break of structure. This was my first entry. So I actually played this imbalance. So we are down there. Price came down a bit, and then finally took me out. So that was actually a loss for me. And then when price took out that high, I saw something here. So actually, I was looking at the chart very carefully. What did I see? I actually saw a distribution above previous highs, right? So I saw markets make what? A high. I saw this. I'm using the candle bodies now, right? I saw a high. I saw the low. I saw a high, and I saw a break of structures. So I'm using the candle bodies. So I saw that break of structure there using the bodies of the candle. That's what I usually use for my break of structure. You don't use the body of the candle. So I wasn't looking at the wicks. So I saw a break of structure there using the bodies of the candles, and then I saw a very clean imbalance here. So I started playing this imbalance here. So just a 10 pips stop loss. Just 10 pips. That was my stop loss. Just 10 pips here. And I actually caught a sell inside there. And it was actually an amazing. Although I didn't hold Asian loss because I was trying to recover a loss. So I didn't really hold for my overall TP because I was trying to recover my loss. So I actually took a 1-2 to recover my loss. I think I took my entry here. Stop loss above that high. And that was actually my take profit just this low here. And I hit it. So smashed rather handsome, right? So around there, my profits 1-2. Yeah, so around there. Right, so I took my 1-2, so around there. And I was hoping that 5 minutes would give me more entry, but that did not happen. So I didn't get it. Sometimes I usually take my first 1 minute. When 5 minutes break, I take another entry of 5 minutes. So I was hoping that price will, give me a 5 minutes entry, which did not happen, right? So price just kept running out. Finally, if I held this to here, I've made an amazing one is to 3.76. But I went to my that one is to 2 point something, somewhere around there. That was actually where, because I was trying to mitigate the loss. That's high. When I'm trying to mitigate the loss, I kind of trade difference. I try to make my take profits very easy to get. I don't like using fat when I'm trying to mitigate the loss. I like to use closer take profits so as it wouldn't really take me long to recover my loss. So if I'm kind of in drawdown, I like to make my TPs easier to hit. Right, I can go for 1-2, 1-2.5, 1-2.2. But if I am in profit, I actually go for 1-3 and above. But I'm trying to mitigate the loss or something is not just as I want. I just go for 1-2. But typically, my trading plan is that I go minimum of 1-2. So it must be 1-2 and above, 1-3. I go 1 to 5. I've even done 1 to 11. That was earlier this year. I think 1 to 11 or so thereabout. So I started do all of that. But I started like to make considering at least 1:2. Especially since I'm not trading a small account. Some of you would think that 1:2 is not anything. But think about it. When you're trading a 5-figure account, you know that 1:2 can be a lot. It can really be a lot. Let's assume that you're trading maybe a 5-figure account. Now, 5 figures simply means, I'm a 5-figure trader. So 5 figures simply means any account that is between $10,000, right, to this 5 figures now, $99,000. This anything between $10,000 to $99,000. Why is it 5 figures? Because the figures are 5. So if you're counting this, for those of you that don't know figures, count this now. You can see on this we have how many figures here? We have 1, 2, 3, 4, 5. So any amount between $10,000 to $99 is what we call 5 figures. So when someone say I'm a 5-figure trader, the person is trying to I'm a 5-figure trader. So something I know actually think about this. Let's actually maybe a 20K account. So I can flip accounts by using small account. I don't know about 1 to 3. I actually find it easier to make my accounts grow. Then when I'm targeting 1 to 4, 1 to 5, sometimes market doesn't just give that. Sometimes price can be so in a kind of tight range. That's it, it's being withheld. So if you're waiting for 1 to 3, you might not really get it. Once that is only possible when the market is expanding. But sometimes markets might not want to expand. You cannot be trading between a range. Those kind of times it's best to use small account. So that's not maybe you're trading a 20K account, right? This is why I want to really bust you guys bubble. And I don't know like if it's not 1 to 100, it's because you guys don't trade big accounts. That's why you think that you must make 1 to 100 to be profitable. It's means you don't trade big accounts. So if you're trading a $20,000 account, right, and maybe you're risking you're risking 0.5%, right? For me, I like risking 0.5% on my accounts. So 0.5% is what? $100, right? $100. All right, this is let's give you a preference scenario now, a real life preference scenario. So if you risk $100, yeah, targeting just what 1:2, right? Let's assume that you hit your TP. You hit your TP, just 1:2. So you made 200. So you made $200, right? You made $200 on this trade, right? With just 1:2 RR. Note, you use just 1:2 RR and you made 200 United States dollars. All right. I want you guys to understand the scenario now. This is why I feel that it's not about having high RR. That's not what you're doing. It's like if you're using profit, you don't really need high RR to be profitable. You don't need it, folks. You don't really need it. You don't really need it. So now you risk that. Let me just make this all these charts to disappear for a while, so you guys can really get what I'm hinting at. Now you have a 5-figure account, or sorry, 5-figure. But I usually prefer 5-figure account. I don't really like 4-figure accounts because I feel that they're really small. So now you're doing just 1:2. Let's assume that in a week you are able to make just 2 wins, right? Since you use little, you just make maybe just 2 wins, right? So you make 200 on your first trade, and then you make another 200 on your second trade. So you make another 200, right? So now in total of a week, I made what? $400, right? So now you have pro firms like MFM usually give what? 75% profit split, right? So 75% profit is what MFM is going to give you out of that $400 you make. 5% All right. So 75% of that actually belongs to you. All right. Since this is a profit account, just giving another. So 75% of that, let me just quickly use my calculator. All right. Where is my calculator? Or if you can have a figure, just help me out. What is 75% of 400? Just type it in the group. Just type it in the comment section. Just type it so I can know. What's 7% of 100? Just help me out. I'm not. It's my calculator right here. Let me kind of check. I think we have the answer. What's 75% of? Just type it in the group so I can see it. Just type in the comment or something. All right. So it's 300. It's 300. I don't know, my Telegram was kind of slow. All right, so it's 300. So now let's assume that, you just made remember that you just took just once to took just twice a week, right? So you made your 300, right? So you have what 300. So now converting that 300, all right. Now you have made what is yours is what. So the 5% splits. This MFF, just give you MFF for example. Your split is what 300. Note that you have used just what, just 2 trades for a whole week to make what $300. Right? Now, 300, if you multiply that by the current rate, that is $300, we are using about 740 now. So if you have 300 times 740, that should be 210 plus 120. That is about 210 plus 120. That's about should be about 222,000. Yeah, about 222,000. So I'm just capping now. I'm not really sure. It's about, I'm not using my head a bit, but my calculator is kind of far. It's about 222K. Yeah, about 222K. So this is I'm not really sure of these figures now. So suppose you have made 200 and what? If you're Nigerian, if you're making this for a month, isn't that a lot of money? Right? If you're making 222K a whole month with just 2 trades, remember I just 2 trades with you, and you just made that. So you can see that you can make a lot more by risking little and using little RR. So someone that is trading with a small account is looking for 1:10. I don't think that he's even going to make up to this in a whole month. Maybe you're trading a $200 account, a $100 account. How far are you going to do to take it to 300? Because you're going to trade a lot. But someone that is trading with a very big profit account is just making just little and it's making much. Just 2 trades. Just 2 trades. Oh. Just 1:2. It's not using 1:3. Oh. Just 1:2. The guy has made what? This. And one thing I've noticed is that if you're using low RR, you tend to have a higher win rate. People that use low RR actually have a higher win rate than people that use higher RR because it's easier for a TP to get hit. So 1:2 will actually be easier for your TP to be hit. 1:2. So if you can do this, you have a higher win rate, and you actually be, if you're actually very good, actually very technically sound, you're going to be very profitable if you can be using just little maybe 1:2. I'm not encouraging you to 1:3 because using 1:2 is for someone that's actually very good technically. Because to succeed with 1:2, you must be very good with your win rate. That means you must win at least 4 out of 10 trades. So you have to have a high win rate to actually succeed 1:2. But if you don't have that technical wherewithal, it's usually recommended use 1:3 because that gap actually keeps you safe, right? So you can actually be losing and still making money on the long run. All right. So I believe that you can see why I don't really focus on using too much RR. I don't focus on I don't really focus on using 1:10. All those things. This is a scam. Those guys that are making 1:10, Can't change their lives. There's nothing really good about them. You see them making 1 to 10, but still they can't, get anything for themselves. You're gonna be trading with if trading is maybe a $20 account and risk maybe $2, making 1 to 10, and their mind they're making 1 to 10. Doesn't really make any sense. When you're trading with big accounts, that you can actually make more. You can actually make more by this by less. A popular saying goes that less can actually be more. So in case of profit, I feel that less is actually more. So you can say if you have a life account, just 2 trades, you have bagged 222K. You can see that just 2 trades, 222K, like that, clean 222K. That's why I always encourage traders to go for profit accounts. By all means, no matter how much you feel it, keep plugging, because profit accounts is the way out, right? I've always told you guys that trading for investors should be a no-no for you. Avoid that by all means. Don't trade for anybody. Don't collect money from anybody to trade. Prop firms are there to keep you safe. The fun part about prop firms is that you can lose your account as many times as possible. You can fail a challenge, blow your account, and everything happen, and you will not owe anybody a dime. You won't be in debt. You won't see the police calling you, asking you to return money. You won't enter into any of those problems. Prop firm actually saves you from that and gives you easy money, right? And what I've noticed that, from my experience, I feel less emotionally attached to prop firm trading, because I know that it's a professional account. You know that to get an account of 20K is about $139 or thereabouts. So now if what's come to what, I'll just lose that. I can't even lose up to this. Right? So I know that it's not even my money that I stake, it's actually their money. So it kind of gives you that emotional balance that every trader requires. So as you're coming up, try by all means this year to get a profit account. Doesn't matter how many times you fail it, just keep trying. But before that, you have to learn to trade properly. This is one thing I also noticed about traders. Some people don't know how to trade. They are very bad traders, and they think that a popular saying goes that you cannot do a wrong thing a number of times and not expect it to be right. There's no way you can be doing a wrong thing over and over again and then expect it to be right. All right, that is actually a misconception. There's a difference between being persistent and doing a wrong thing over and over again. So you cannot know how to trade properly and expect that after trying for 3 years, you now have a magical push, right? No matter how long you do the right thing, a wrong thing, it doesn't make it right. So before anything else, you have to go and learn how to trade properly. How do you know that you're learning from a proper source? You look at the result of those people that are there. Those people are using that system. How profitable are they? Right? Look at an academy that has results. Look at the people there. So you don't really use yourself as a yardstick. Look at others around you. And this guy is actually doing well. Fine. That means this thing actually works. And when you find what works, then you give yourself to it. So it doesn't really matter how much you fail your account. It doesn't really matter how much you blow your account. But one thing is guaranteed: if you keep trying these prop firms, they're eventually going to pass it and make good returns. You can see how comfortable trading can be with a big account. Just imagine this. Just with only 2 trades a week, you're making comfortable 222K. Just comfortable, not even risking, just 1 to 2. Just very comfortable. You're making your cool 222K every month. And someone like me, I can make this is just 2%. What? I can make up to 5% a week. And if I want to really, really be aggressive, sometimes I can make as much as 5% a week. That's 4% in a week. So imagine I want to go that by beast mode. I can actually do more than this. So this is just 2%. Let's assume that I'm actually on one of my very good weeks, right? And I actually do 5%. No, I would say I actually do 5% like in a week. So 5%. Imagine that one of those my good weeks where I make 5% a week. So I make 5%. That's about 5%. That's about $1,000, right? So imagine you make this, right? $1,000, and you have your 75% spot in your profit, right? Your 75% spot, right? This is you have what killing what $750. This is more than 500K. So you have $500. I'm sorry, you have $750 for yourself. So you have your 750 effortlessly in just a week. And by my estimation, this is about 500K or 500 something thousand. You can see how easy trade profits can be. So easy. So easy. That's why if you ask yourself this, in terms of you actually changing your life, is actually very high because one trade is really a whole lot, like a whole lot. One of my goals for this year is to actually advance to six figures. And that's also what I'm actually aiming for this year, to advance to six figures, right? Because by then I want to actually be able to contribute more in that to the trading community. We'll be holding they're having some kind of scholarships where traders can actually they're looking for funds. They can actually meet me, show me their result, and I fund them, right? It's not about making money. I have to also give back to the society. That's what I actually have in my mind. When I actually get that six figures account, I can actually kind of create a scholarship system where traders can, use that maybe demo account, and if they do well, I can say, okay, come, let us fund you. Buy a open account for you, free of charge. Just a kind of give back to the community, right? So I'm only making that for those that actually are good traders. If you come and make money, I'm not going to give you. I'm going to give those that are committed. You meet me, you need funds to trade, you check your results, you can actually get to your profit account, or if you need funds, you can put it directly, right? That is basically what I plan to do by the end of this year, right? To get the six-figure account, and then you can do all these fun stuff, right? So that's what I said. So what have I said so far? I have said so far that you don't really need to have high IRR to be constantly profitable. You don't need it, because high IRR usually means low win rates. Also, I know high IRR usually means low win rates because it's not every time market we want to move far. Now let us assume that at this trade now, let us do some. What? I'm going to change the time frame. Are you kidding me? Wow. I don't go commit. All right, let's just go back to where we are. So, like I was saying, now let's assume that this trade now, we're looking for 1 to 10 on this trade. I want to show you guys that sometimes market doesn't really give that. Almost I've noticed that sometimes range markets can be so profitable because it will continue presenting setup and setup. So someone that actually use low will actually make more money from a range market. Sometimes the market doesn't really move so wide. As where you have to learn how to be flexible. It's not every time you're looking for 1 to 5 or 1 to 10. Sometimes the market wouldn't give you that, right? You have to learn to be flexible. Sometimes the market presents you a small trade, and sometimes it's above 1 to 2. I feel like it's good to take it. So now let's look at this. Let's assume that this way you are looking for 1 to 10, right? 1 is to 10. You have waited maybe till today, and I'm taking you what this long. Imagine you're looking for 1 to 10. You have to endure all these movements, endure all of this, endure all of this. Price go all down, all down, all down, all down. Meanwhile, someone that knows how to use small will take what 1 to 3, take another one, and then he's taking price down. If you look at carefully, price was giving more and more sell setups. Once that looks at price usually gives setup. A market is moving down, usually give what a setup for yourself, another one, another one, another one. So you know setting for 1 to 10, you have to endure all this drawdown. Why someone actually know how to use lower time frame and take a quicker we make it what make 1 to 2, make another one. So that is also. So I feel that some markets do not favor high trading system. So you must have to be flexible to take what just target as a principle from my mentor. I learned that one of the most stress-free ways to trade is to target the low hanging fruits. So if you see an apple tree, all right, what that means that if you see an apple tree and you see you see an apple tree, with its fruits, right? There are fruits that you can stand and jump and grab it. There are some that you need to climb the tree to get it. So the principle of low hanging fruit is that you go for those TPs that are easier to get, right? So it doesn't make your trading very less draining psychologically. So imagine you have to endure all this. Your profits go up, down, all down, all down. Meanwhile, someone else wants to 2 are just taking and go up. So one thing in trading is that you have to learn how to work with your psychology. If you're someone that cannot really don't have fortitude to endure all this drawdown, just simply make your trading system simple. 1 to 2, 1 to 3, you live the trade. Like I always say, you don't always have to be in every move. Just get in, get out. You know that, and that's because when you're using a big account. Right, so you can see that. So basically, that is basically how I feel. And I've practiced this system, 2 of them. I noticed that although my technical skill actually improved too, but I noticed that when I was using 1 to 2, 1 to 3, I was more profitable. The way I was targeting longer RR, I was more profitable just using 1 to 2, 1 to 3, 1 to 3, 1 to just simple 1 is 2.5, 1 is 2.2. This time my account was skyrocketing faster because I was having a higher win rate. And knowing that I'm kind of technically sound, I had a high win rate as well. So high win rate actually favors what low RR trades and makes it was profitable. I was watching an interview by Paladin, and he said that he used a 1 to 2 system. Paladin actually, he withdrew a total of $250,000 last year. And I was comparing him with so many guys in Sweden that are making 1 to 10 and comparing their lives. You're making 1 to 10. Okay, maybe 1 to 10. What is the proof? What some of these guys do that they will go and this is what most of them usually do. They will time maybe 10 lots, right? They will time a trade with 10 lots. And at one, maybe 1 to 2, they will close 9. So they will close 9 and leave 1 running. So now I have 1 lot running. And just say, yes, 1 to 10. What's the point of using 1 lot for 1 to 10? What you can simply do was allow your whole 10 lots to run 1 to 2 or 1 to 2.5 and just simply close it. So I feel that when you're using a low RR system, you must allow your risk to be worth the reward. There's no point when you're using maybe 1 to 2 or 1 to 3 to be closing partial. It doesn't make any sense. You're using 1 to 2, 1 to 3, you know your RR is small. So it's also wise that you allow your risk to give you the full reward. So you're using 0.5, there's no point closing partials or reducing it on the way. You can simply, if you're not okay with it, you can move your stop loss to break even. But using this system I'm teaching you guys, all right, using the principle of low hanging fruits, you have to learn how to leverage because the leveraging is what will actually make you profitable. All right, so instead of using risking 10 lots, putting 10 lots and now close 9 to make 1 to 10, doesn't make any sense. Why don't you simply use 10 lots, go 1 to 2 and close everything there? So quick, you can do something else. They're having to endure all this can be very, very emotionally draining. Watching market do all this shitty movements. I understand you can even take care before moving. So you must learn how to target the low hanging fruit. So I want to wrap up with this. What I want to say, I want to talk about the equation of trading success. Right, I think I was sharing this with the paid students on Sunday. We usually have calls on Sundays, like the paid students now, and then we have back testing sections on Wednesdays. All right, it's only for the paid community. All right, so I was telling them something. I was saying that for those of you that already did chemistry in school, right, you know that one thing about traders is that they like looking for the chatty stuff. Mental text, call it the chat phone. Chat phone or something. That's why it calls it mental text. They're not looking for where they will see S&D, all those funny names, nicknames, mitigation, blah blah blah. And after learning all this, they are still not profitable, not to make a difference. All right, so now you have known everything. What is the difference in your trading account? You have known SMC, you have known YCO, LLC, you have known everything. But what really happens to your account? Did you grow? Nope. So some people actually say that when someone is teaching you something, and the person is talking about different components, like get to the point. What does equation have to do with trading? What does all this have? Jim Rohn will say that. Jim Rohn said that everything has everything to do with everything. What Jim Rohn usually says that everything has everything to do with everything. That means the things you think don't matter, right, actually would make the difference. I don't know if I'm getting it right. So that's everything. So is it the little things? No. I think it's everything has something to do with everything. That's how Jim Rohn says it. I'm not correct, just kind of rephrase it. I know I'm already getting the term very correctly. But now it's something like everything has something to do with everything. That means even when I'm watching a trading video, some people like fast forward, like for example, some people who are watching ICT video now, they fast forward the stories, they fast forward everything, not knowing that everything has to do with everything. So when it comes to trading, you have to learn everything. Don't that you just focus on technical analysis, your psychology is messed up, you do nothing about it, you have views all over you, and you think you will succeed in trading. So everything has to do with everything. I haven't noticed that sometimes you come to trade, maybe you're pissed off, maybe someone just angry, and you notice that day becomes a bad trading day for you. Because everything has to do with everything. So those things you think that don't really matter are things that actually was contributes to your downfall or your uprising. All right. So now I was telling them that when you want to produce water, or let's say the component of water, we have what? Hydrogen plus oxygen, right? This is what makes up water, right? So we have these two combinations, right? Oxygen plus hydrogen makes up what? This hydrogen, not hydrogen. So this is what makes up water, right? Now, this is the equation of water. If you study chemistry, you know that it's I feel it's 2H2O plus 2O2 and makes up water, something like that. So this is the equation. If you did it at a very sorry, you're gonna get it. Right. So when that's hydrogen plus oxygen is what gives you water. And now this combination is the equation for water, right? Now, if you go and alter the temperature, let's assume that at this combination, there must be a particular temperature, a particular pressure, and a particular volume before you can get water, right? So if you go and combine this now, if you use a very cold temperature, you must likely have ice. If you use a very high temperature, you might likely have what? Water vapor. You won't have what? The drinkable water. So notice that there must be an exact combination for this hydrogen and oxygen to give you water. If you can add hydrogen, oxygen, and something else, it will not give you water. If you can add something like maybe maybe iodine, you have something that looks liquid, but it's not water. And if you drink iodine, you might die. Because iodine is actually poisonous, be taken into your mouth. Right? So notice that to create this water, you have to have an exact combination. There must be an exact level of pressure, an exact level of temperature, and an exact volume with regards to the molecular fraction or molecular percentage, right? That's the thing that applies to trading. There's actually an equation that results in trading success. And by my understanding, I feel that this is the equation. We have what? Skill sets. So you must be technically sound. Guys, skill set is just one of it. But sadly, so many guys focus on skill set. They focus on learning every single strategy. I know some guys that are in my academy, they have paid for 9 different mentorships because they feel that all it takes to be successful is the skill set. That's wrong because that is just one of the equations. That's just one of the variables in the equation. Sorry. That's one of the variables in the equation. So skill set is not the only thing that you need to be profitable as a trader. That's why I actually pity traders. In fact, I always say this, that since I started trading, I've paid for only 3 mentorships. Only 3. And the last time I paid for mentorship was sometime in 2021. I think that was the first quarter of 2021. I didn't pay for anything last year. I don't think I'll pay for another one. Because I have a skill set. So skill set is not, it's always where many traders actually fail. They focus a lot on skill set. Skill set. Give me the best strategy. Give me the best blah, blah, blah. Give me the 100% win, the 100% goal strategy, blah, blah, blah. And they forget that hydrogen alone cannot give you water. So skill set alone cannot give you what? Trading success. You cannot, folks. The other component. The next component or the next variable to this equation, we have what? So after being good what? Technically, you have to have what? It's a good psychology. I think that the equation is not just one thing now. So you can say that psychology is not the same thing with skill sets. If you are a fearful trader, no matter what you learn, you will see your setup on the market, but still you won't take it because you are afraid of losing. You see your strategy. How many of you have been? But let me feel maybe if it's only me. If you have been in a trade, or maybe if you have seen a trade setup that had all your confirmations and you were afraid to take it, and the trade play out, drop some one on the group. If you know you have been in a trade that you saw everything that based on the skill, everything was present, but you were afraid to take it, and the trade actually played out, drop some ones in the group. Have you been in a trade where there was every confirmation, but you couldn't take it because you were afraid of losing money? Drop some ones in the group. If you have been in that kind of situation, just drop it in the comment section or in the group. Just drop it. Just drop it. Come on, just drop it. Drop it. If you have been in that kind of scenario before, drop it on the comment section. If you have been in that kind of scenario, that you saw all your setups present. I have to even drop some ones, but I'm part of that. If you have been in that kind of scenario, just drop some ones on the group. Let us see if I'm the only one that has been in that kind of situation where everything was present, but you couldn't just take the trade because you were afraid of taking that trade. Just write some words in the group if you have been on it. That kind of situation, right? Someone has been on it, that is Mr. Solomon. Who else has been on it? Wow, someone said 2 days ago. Amazing. So you can see that it's beyond skill set. It's beyond skill set. So you must have a good psychology. Now, psychology is one of the most misunderstood things about trading. Some people will say psychology is disturbing me, but what are you doing about your psychology? Nothing. So psychology, to have a good psychology, you have to actually work on it deliberately. And one of the things you can do is to listen to trading psychology trainers, people like Mike Douglas, Control Mindset. Those guys read the books on psychology. You have to learn how to read your Bible. Some people don't read the Bible. You can actually cultivate good psychology by reading your Bible. Passages like all things work together for good and trusting, right? You have to understand that trading losses must be there. No matter how good you are, you must have losses. So it helps you to know that yes, I will have losses, but if I use my trading plan, I will still be profitable. So you must have a good trading plan, which gives you a less loss and more win. So you must cultivate your psychology by having a trading plan, by going through materials on a daily basis, and by self-awareness. Self-awareness simply means that you need a vibes check. So you always check yourself, okay, ask yourself before you place any trade, ask yourself this question: am I in a good state of trading? For instance, that maybe you got into a fight with maybe someone. That is not a good time to be trading, fam. It's not good. Maybe you have an urgent bill to pay by tomorrow. That is not a good time to trade because you're under was psychological duress. All right. So you have to learn how to be self-aware. You have to actually monitor your mental environment. Ask yourself, should I be trading now? Am I technically okay? Am I feeling? Do I think that I can handle this? Trading will always test you. It's going to test you over and over again. But today, I should have made. I don't want to talk about it. I'm going over it. I should have made about $100 and something more today. But I don't know. I was kind of stressed out. I just closed the trade and still went out. I was like, what? That happens. But I knew that I was actually stressed out, so I shouldn't be trading. So I just simply said about it actually played out. But that's one of those things. Right? So now, after having these 2 things, the next equation is, I think that these are basically 3 things. Right. There must be a time component in your trading. So now, one thing I know about trading is that the time it takes for person A to achieve trading success is not going to be the time for person B. Why? Because person A and B are not coming from the same background. Person A might be coming from a rich and wealthy background, and person B might come from a poor background. So they all have different experiences. That is why their time cannot be the same. Some people have been in conditions where they have lived all their lives from hand to mouth. So you can't really expect that kind of person to have the same success with someone that has been actually very comfortable. Let's assume that you have been in a very comfortable family, right? You guys are having millions in your account. You believe me, if you actually put in the work, you have a lesser time because you don't really have that need to make money, right? You don't really have too much priorities. Like you don't really have bills. You don't really have so much bills to put some kind of unnecessary pressure. So imagine trading now that even if you make profit or not, you can still meet your bills, right? You still have you still have all your bills being met because of your background. So you won't really need much time, as in the case of someone that has actually come from a poor family. So I feel that the reason why many people cannot have the same time components is because of their individual differences. So the sad truth is that time cannot be controlled by you. There's nothing you can do to improve on to force the time to be shorter than that. So I think that time is not really dependent on your efforts. No matter you can be watching videos 8 hours, but 10 hours every day. Your time component is not enough. It's not enough. Time builds experiences. You have to blow account certain number of times before you actually get the lesson. You have to lose some trades before you actually get it right. That's what time is it. Some things I learned it by losing trades because I don't know what this is a wrong thing to do, right? So time also helps because it creates those experiences around trading, right? So time comes experience. There are things that I see some of my mentees do it, and I just laugh at them because, for instance, today, one of my students was trying to buy EU today. I was like, oh boy, did they like leave counter 10 trees alone? Because I have seen that in panels, and that's it's a bad thing to be doing. Some guys feel that as long as they are on the chart, they always have to be trading. That is wrong. You come to analyze, don't come to trade. It's not compulsory that as long as you analyze the market, you must take a trade. Or as long as you're in front of the chart, you must take a trade. It's not compulsory. You don't always have to take a trade. So this is something that time will teach you. When you start seeing that your account is not growing by taking too many trades, you know that sometimes it's just better to sit out. So, and sadly, this lesson is not taught by a mentor. No matter how much you shout, stop taking counter 10 trades. Some people will until they blow their account and blow. That's what they will learn it. That's what time comes to do. Right? So time is actually one of the things that actually is part of the variables. But time is individual based. Right? The time to take person is some of you it's taking longer time because of your adamant ego. Some people cannot just listen. They don't want to listen. They want to bend the laws of success to be theirs. They don't want to formulate their own laws, and it's not going to work for them. So you must be humble enough to know that there is actually a way which was not created by you. You have to learn from someone else. You have to be humble to take instruction. Some people, the reason why the time will take longer is their ego. They don't listen. Some people are actually very stubborn. They don't listen to hear word. Some people that watch this video, they will never watch it. Some people some people that do this, they do that. People that do this, go like, I don't necessarily go. So those guys will be like time. Tell the person, watch this video, they don't watch it. Do this lecture, they won't go through it. Attend this class, they won't attend it. So that's why sometimes time is different. So it depends on individual differences. Right? Individual differences. I actually want to make some time. Give me a moment, let me do something. I'm coming. So we're wrapping up now. Let us give you guys the equation for what this to success in trading. All right. So that means I think time has a lot of things about me. So on that time, we have experiences, we have lessons. All right. Time has a lot of things. You have a lot of lessons. There are things that, for instance, now I know what to expect during sometimes I know what to expect sometimes in the market. Sometimes in the market, the reason I win some trades is because of experience. It's not like I use anything technical. It's just experience. I've seen this in panel before, or I've been in a situation that is like, for instance, today, I saw that USD news was about to drop. All right. Some of you guys will say that, okay, it's a USD news, so I can trade GJ. All right. But from my experience, I have noted that anytime USD news is dropping, GJ is usually affected. Although GJ is not the USD pair, but I know that GJ gets affected. So what I did was I took off my limits. I deleted my limits from GJ. And like I already knew, the news sent GJ, like the spike was crazy. Like the spike was crazy. If you had the limits then, you would have likely blown your account for reals, or maybe lost your program account. So the only reason I could avoid that scenario was because of what? Time. I've actually experienced where GJ did me shake because of news. I was like, what is the relationship between GJ and USD news? I don't know, but I know if it drops, I stay out. That's the only thing I know. That if USD is about to release news, I close all my trades, especially if it's USD, because I know USD affects everything because it's the mostly used or mostly traded currency pair. Right? So time will give you all these lessons. So stop being in a hurry to get it all now, because the time comes with lessons. The month of March, the lessons that time will give you, that the month of April will not give. The month of April will come to give its own lectures, and you have to be open-minded to receive it. So every time period will usually come with its own lecture. You usually have one lecture that comes with time. It's just like that, right? And you can't rush it because it is just like that. The lesson you should have learned in April. No matter what you do now, you won't learn it until April comes, right? So that is one thing about time. Time is not really under your control. So those experiences are things you build with time. That's why people always say to see success in trading, you must have been trading for at least 2 years. That is the benchmark to actually be successful in trading, at least 2 years. And I've been training for more than 2 years, actually. But we was training for at least 2 years because during those 2 years, you actually make a lot of mistakes, learn, blow your account, blow it again, and blow again, and then blow another one, and then finally grow your account, then blow it again. All those things actually build up was the experiences and do something on that time, all right? So just be patient with yourself. When you blow, I can know that it's just time. Time is teaching you a lesson. Always learn to see the positive in every circumstance. Yes, you blew your account. What did you learn? Did you learn something from that? Yes or no? When there are pairs I don't trade because of how they move. Time has taught me that certain pairs I shouldn't be trading. For example, I don't trade tennis. It's usually very crazy. That's why I don't trade it. Time has taught me that I shouldn't be trading this tennis or UJ. Man, I hate those pairs. So I think that time will teach you the pairs to be trading, the pairs shouldn't be trading. So give yourself 2 years, right? Before you give up, just listen to more. Before you give up on trading, give yourself 2 years. And when I mean 2 years, I don't mean 2 years that you come today and then you won't open chat the next 3 weeks. And then you call yourself 2 years. Nah, I mean every day you show up. Whether you take a trade or not, you show up. You're not show up to take it or show up to back test or show up to study or show up to say, just show up, kuku show up. Anything you do, just show up. Whether you're reading or not, just show up. Like tomorrow, I'll study chat. Sunday, I'll study chat. That is how it is. So give yourself 2 years of consistent showing up daily. Not that you go and you black out today and then you take 5 months to open chat again. That is not, and that is, some people say, I'm doing for 4 years. How many years were you consistent? You can't even mention it's up to 1 year. So I feel that 2 years so the benchmark to build the experiences that are required to actually success. So give that 2 years of consistent effort. Not 2 years of 1 month you're in, 1 month you're out, then the next 3 months you're having a fight with the chat. The next 5 months you're complaining. No, nah, that's not what I mean. I mean, give yourself the time. So I feel that 2 years is actually the benchmark. You must have made all your mistakes, blow all your profit accounts, fail the challenges you need to fail. And Paladin was saying something interesting. Paladin said that he his first 2 years of trading, he lost a lot. And he failed 40 profit challenges. But now he's a 7-figure trader. So you can say that in the space of his 2 years, he blew 40 profit accounts. Like he lost all of them. He lost thousands of dollars. But now he's spending 250K. So that 2 years was when he was actually learning and relearning. You must have to be humble. Don't take the grudges, right? Don't take grudges when you do this, when these bad things happen to you. Actually, grace working in you a greater good, right? So they're giving you the experiences that will actually go towards your trading success, right? So I feel that these are the 3 basic things that actually are in the equation of success. So you need a skill set. The skill set is gotten from the right mentorship and deliberate effort. So if you're in an academy where the only person that's making profit is only the mentor, then you might need try to consider joining another one. All right. That is why most academies prefer going by monthly subscription. But I don't think that's wise because trading takes time. I don't really think that people should pay you monthly. It doesn't make any sense to me. I think it's better to be yearly because yearly they will have enough time to experience everything they need to experience. Right? It's not really wise it should be monthly. It doesn't make sense to me. That's the personal opinion. Trading takes time. So you need to have to teach people for 1 year at least. At least 1 year. So that's why I kind of made my academy to do 1 year. So I know at least there's no how you be serious for 1 year that you won't see progress. So instead of making it monthly, let it just be 1 year. So I know after 1 year that I have with you. So let us see how far we can go. So you have to locate a good academy to build the skill set. You have to locate where people are making progress on their own, not where they are calling things buy here, sell here. No. You will, in fact, you can be in such academy for 10 years and you will never see any progress. Where they're telling you buy here, sell here, all of them are short. If that person doesn't tell you why, just here, enter a sell here, stop loss here, TP here. Are you doing your skill set that way? I don't think so. So locate where you can see people with track record of good results. Pay the price. You might need to withdraw what is in your account and pay the mentorship. You might need to stop blowing the account. That money is using to blow your accounts. Stop funding. And that's why I always tell my students, stop funding and learn. That money you're using to go every day. Some people that always on Airshare platform every day. $5 funding. I'm just watching them. I need to watch them. Every day they have funded $5. So nice. They have funded $5 like 4 times a day. They'll fund the first $5, they will blow it. Fund another one, $5, they will blow it. In fact, if you calculate what they are spending a week, they should have used that money and paid for mentorship and learned properly. But some people they don't see something I'm saying now. The $405 now, blow it. $400 blow it. $400 blow it. In a week, they are blowing close to $30. In a month, they are blowing close to $120. If they had saved that money and joined a mentorship, they would have saved that loss. But they think they're making us rich and they keep doing their accounts. So I feel that if you are not seeing progress, then there's something you don't know. Get a skill set first. When you have gotten the skill set, I know that okay, you're good technically sound. Okay, you can go analyze it, and then next you should focus on what? The psychology. Why time plays out. So I feel like these are the three things which must be in the equation of trading success. These are the three things. I don't know add a fourth one here. I think this is also it. I think it's also part of it. Capital. Yes. Many traders actually have good psychology. They have good skill sets, but capital is the issue. Like I told you guys earlier, how we can make comfortable 220K in just 2 trades a month. A whole month, just taking 2 trades on your 20K account. You're comfortable making what? 222K in a whole in just 2 trades a month. Just comfortably. That's why I love prop firms. In fact, one of my students came to the meeting today, how you were able to withdraw from FT Nigeria today, right? I couldn't post because of the sensitivity of the chart, but he was showing me how he withdraw more than 200K today from his prop firm account. I was like, wow, that is beautiful. That's only that possible if there was no prop firm attached to it. So I think that capital is actually what makes the difference sometimes. Sometimes you might actually have the skill sets, they don't really have the capital. I actually suggest 2 things. Number one, get a prop firm account. But if you cannot do that, then you can simply, meet investors to manage their accounts. No, I don't say invest like let them not give you your money. Don't collect money from anybody. If you want to do investors, number one, get a lawyer. Number two, write an agreement that so if anything happens, you will bear this. I will be free from this. Have a written agreement that keeps your neck safe. So if anything happens, you will not be arrested or blah blah blah. You understand? So I don't encourage trading for people. Like, as I'm speaking now, I don't trade for a soul on earth, and I would never do that anymore. I don't trade for anybody. I would just grow my wealth myself. I don't want to be involved with anybody's capital. I don't want all that drama, right? So I just want to use only my private accounts, family funds, right? You can actually ask for your family members. If you have maybe a rich uncle, rich auntie, I can actually give you like money to say, sir, mommy, uncle, please, I have a business. I don't have capital. Can you help me? All right. After X amount, I'll say how to pay you, right? No, if your uncle will ask to pay interest, you can say, okay, I'll give you 100,000 naira, but give me a guarantee that you will not lose my money, and you give me back after 5 months. So you say, okay, yes, uncle, that kind of thing. So you can only meet your family members, that have money. Please, can you help me out? Those guys will be more favorable to you than going for investors. So you can meet your uncle, your mother, your father, your aunties. Let them give you capital to trade, because capital is going to really help you. Right? Instead of making $10 on a trade, you can make it as much as 100. So capital actually makes the difference. For me, capital actually makes a difference because you trade less and you make more. Some of you guys, your 10 trades is not up to what I would make on my profit account with just 1 trade. Some of you can take 10 trades like back to back, and the sum total of your profit is not what I will make on just 1 trade on my profit account. That's why capital comes in. Capital actually helps you to scale your accounts. Capital actually helps you. Imagine trading a 100K account. That's why you're trading a 100K profit account. Maybe pass the challenges, blah, blah, blah. You pass the challenges, and then you have a 100K account, right? If you have 100K accounts, if you make just 1% a month, you have clean $1,000 for yourself. Just 1% though. You have was clean $1,000 for yourself. Just 1%. But compare that 1% to your current trading balance now on your small account. 1%, can it do anything for you? Or just a lot? You can see where capital comes in. That's the same trade you would have made $10 on your small limited account. You can make like 200 or 300 on a profit account or a bigger capital. So capital is actually one of the things that actually makes the difference. Capital really makes the difference. Yeah, it does. So you have to When you have learned, you have gotten a skill set, and you have psychology, I encourage go for capital. Look for family members to collect money from, not on loan to help you or to invest in your trading career, right? You can have an alternative means of income. Like I always tell my students this: always have an alternative means of income. Don't make trading your only source of income, especially if you have not been constant profitable for at least 3 years. If you have not withdrawn from the market for 2 years at least, don't make trading your only source of income because you will be under intense pressure. For someone like me now, even if I don't make a single dollar for 2 months, I would still be able to feed because I don't depend on trading for my feeding. I don't depend on trading for my clothes. I don't depend on trading for any of those necessities. That's why I can afford to trade and not be so attached because even if money comes or not, I have other means to settle my bills. So that's why I always encourage students that don't quit your job because of trading. Still have the job. Let it just be there to handle your feeding. At least your feeding, your clothing, your transport. Those have something to help you. If you don't have a skill, we have a lot of online skills now. Affiliate marketing, KDP, graphic design, web development. So many things to do. You can even be a broker affiliate. There are so many things to do, folks. Have something to feed you. And then it's when you're fed, you can be able to learn. Some of you will say, I want to be a trader. You don't have any job. You don't have to thank your account. You want to be a trader. You're not wise. Wisdom is far from you. So don't make trading a source of income when you are still learning. You need to have other means of income. Then you can secure capital, either from other means of income or from your family, or you cannot simply save up and buy a proprietary firm account. So proprietary account can actually help you with this capital issue. All right? So what I'm talking sense here. I think I'll wrap up with this. I've talked about the 4 equations that lead to trading success. You must have the skill set, the psychology. You must submit yourself to time. Right? Time is not under your control. Time is what is controlling you. Right? Then capital. So you must look for capital. No matter how good or bad you are as a trader, you need capital to succeed in trading. No matter how they want to. But I always see some funny mentors telling that join my mentorship. I will teach you how to flip $10 to $1,000 in 1 month. That is life, folks. If that was possible, we would all be billionaires by now. Don't listen to those folks. Even if it's possible, I've never seen an account flipper that was consistently profitable. They always do that maybe for 1 month and blow it the next month. I've seen students that passed challenges in 2 days and they blew it before you can say Jack Robinson. They blew the account. So flipping is not sustainable. What is sustainable is what? Making a reasonable RR on a big account. So get a big account and make something reasonable. If you have a 10K account, if I have a 100K account, I cannot singly targeting just 2% a month. 2% is comparable to 2K. 2K, 7% is about 1.5. I'm making 1.5. That's more than $1 million every month. Very easy trading. I want to trade maybe. So since the capital is big, I can maybe reduce my risk to 0.25%, maybe 0.25 or maybe 0.3%. Just target 2% and then call it a month. I'm done for the month. Most of my withdrawal. So as you have just a little job to do and you can make a lot, just small trades, just big account, just one small trade, I made $500, make another small trade, make $2,000. It becomes very easy when the capital is there. So don't listen to all those account flippers. They are lying to you. Get the big account. For my static account, I always say that I don't trade less than $100. I don't trade less than $100. I don't trade anything less than $100. I don't trade less than that. I have any big accounts, 200, 300, 400, 500, 1,000, 10,000, 5,000. Those kind of accounts also I like trading. I don't trade small accounts. Kind of keeps me. It's kind of forces me to be trading a lot. Like today, I took only 1 trade on synthetic and it was a lot of money, like a real lot of money. Just 1 trade. It's a lot of money because my account is actually big. So account is actually very important for you. So even if you have not seen 100K, if you have not seen 100K in your life before, make it a goal today that before the next 2-3 years, I need to acquire at least this account size for my prop-time trading. Even if you cannot have it on your own, at least buy it. All right. So I think with this, I'll be wrapping up with this. I wish you guys a wonderful election. If you want to join our paid mentorship, do what the same again, because I've told you guys, you cannot get skill sets for free. There has to be an exact level or arrangement of knowledge. The skill set actually comes first before psychology. Then after psychology comes time and capital. Because time is actually, time is actually integrated to everything. So time is in skill set, time is in psychology, time is in capital, it's in everything. So time is just like the denominator. Why those are the numerators? Right? So that time just below all of them. Right? So time actually cuts across skill sets, all of them. So time will also determine your skill set. Some of you will be actually very good after X amount of time. Some of you are supposed to be better after X amount of time. Some of you actually pass the challenges after X amount of time. So that is it. So if you want to join our mentorship program, just send me a DM, join us, go through our lectures, you see that we are making progress, we are seeing ourselves progressing. It's not about the money, it's about the skill set. There are some people passing challenges. In fact, the guy that actually told me that we do 200K today. I think when he joined our academy, he paid, I think, was it about 25K when he joined last year? But he's doing 200K today. But he joined with about 25K. That was sometime last year, thereabout. But we do 200K today. So compare 200K minus 25K. You can say, who's actually making gain? Is it me or him? I think he's the one, right? He has learned what can give that kind of returns with what? A little fee. So if you think you're making a mentor rich by joining mentorship, you're playing yourself, right? So have a wonderful evening. Cheers. Okay. Okay. The guy said he made 20K. So he paid 20K, he made 200K today. So he paid 20K. So he paid 20K last time, he made 200K today. So imagine the investment. That you're paying 20K, you're learning the skill set that can give you 200K in a month. You made 200K just 1 month on your people account. So you can see the difference. So it's not about the money, folks. It's about getting the right skill set. Right? So have a wonderful evening. Cheers and God bless.